what we have is a really exciting kind of ecosystem and energy around, these returnees, these entrepreneurs who have, local knowledge, have grit, maybe have, worked in other countries or worked at top Nigerian banks and are seeing what the problems are and thinking of innovative technical solutions to address them.
It's my pleasure to introduce Michelle Essomé today to talk about entrepreneurship in Africa. Michelle currently advises startups on capital raising and scaling. She has more than 20 years in financial services experience spanning investment banking, investment management, recruitment, DEI, private equity, and VC. She also has quite a bit of international experience throughout the UK, Africa, France, as well as the US. She was the CEO of African Private Equity and Venture Capital Association for 9 years, where she's widely credited with catalyzing the African private investment industry. She's also been named a woman to watch by Bloomberg Africa. She has an MBA from Columbia Business School and a BBA from in finance from Howard University. Most importantly, she is my classmate at Columbia Business School and cluster mate from class of '99. Welcome, Michelle. It's great to see you. Thank you for being here.
Thank you.
So Michelle, to start things off, can you tell us a little bit more about what you've seen in the past 10 years or so? I believe you've been working pretty closely engaged in the entrepreneurial ecosystem in Africa. You've mentioned a sort of renaissance in economic development during your time there. Can you tell us a little bit more about what has driven that and some of the factors at play?
Yeah, absolutely. So why don't I give a bit of background on sort of how we got now, how the ecosystem developed. So I started working in Africa, and I'm probably, one of the younger ones in terms of experience, maybe 2010, 11. And at that time, you had a number of, democratic transitions of power, presidential elections that went well. You had some easing of indebtedness by IMF and other multilaterals. You had a lot of what we call returnees, professionals who were educated at Columbia or peer institutions who wanted to come back and do something good for their country. You have a sort of, growing growth equity, private equity market, and you have a number of players who've been doing exits. So it was a period of a kind of relook at the continent. And around that time, McKinsey wrote a really seminal piece called Lions on the Move, which is, about 100 pages, but the executive summary will give you a nice flavor. So you have a number of countries where GDP growth is faster than in some developed markets. You have young population. In terms of productivity, it was higher. So you had a sort of environment, or you have an environment that's conducive for private sector development, and also a different perspective on what the opportunities are. And at that time, The Economist republished a section on Africa, sort of connecting with something they had said 10 years before, in which they call continent, the hopeless continent, but now the hopeful continent. So it was at that point that I started working for AFCA and trying to sort of, catalyze or change the narrative around investing in Africa, primarily through PE and VC. But it's all part of the environment to eventually help family-owned businesses and entrepreneurs. So fast forward to today, 2022, and it's almost radically different in 10 or 11 years, where you have some fintechs who are now unicorns. In fact, there are a lot of them coming out of Nigeria that have, for example, Paystack was bought by Stripe. There's Paga, who's been around maybe 15 years, that has good penetration in Nigeria and West Africa and also in Latin America. So you have a lot of success stories on the VC side, whereas 10 years ago, most of the activity was either direct or in the growth equity space. So in terms of the entrepreneurship activity, because you have a lot of opportunities that have grown from addressing African problems, And payments can be an issue. For example, many emerging markets, currencies are pegged to hard currencies, so the shilling maybe to the dollar or to the sterling, same thing with the rand, due to historical ties, Angola to the euro, because they were colonized by the Portuguese, which meant that it was really cumbersome to do business intercontinental across countries, even if a border could be a mile away. So you have a lot of innovation sort of addressing issues that could be laborious. And that has attracted money from Silicon Valley, as I said. That has necessitated the growth of angel networks. I mean, there are a number of them all over the continent, those that have a sector focus or have a gender lens. It started, you'll probably find in, Y Combinator or Techstars or any of these big sort of incubators, you'll find graduates or participants from across the continent, or there'll be road shows where these sorts of programs will travel throughout the continent, mainly to the big hubs, Nigeria, Kenya, South Africa, and Egypt. But it's very, very hot now. And you have some very innovative, entrepreneurial, very, very hardworking, because the barriers of entry in a relative sense from a developed market to an emerging market are really tough. So I always say if you can find, an entrepreneur who's raised some seed capital, friends and family, and some other seed capital, and has a product that will soon be profitable, it's worth taking a look at, because it's really tough in these markets to get to that stage.
Yeah, excellent. So you have a political environment, government policies changing, returnees, as you mentioned, a young population, and it sounds like some of these challenges, especially cross-border challenges with payments and so forth, is actually attracting interest. So you have now a sort of like a ecosystem and support system, as you mentioned, some of the accelerators, investment and VCs coming in. Now think about just the last couple of years during the pandemic. Mm-hmm. What either opportunities or shifts in investment have you seen, and how has your role had to change during this time period?
Yeah, sure. That's a good question. So yeah, I mean, in many emerging markets, there tends to, it could be cash, it could be cash based. You go to the market, you're buying fabric or food, you're bartering. And, with the pandemic, when many countries were shut down, that could have been potentially detrimental for people's livelihoods or, abilities to support themselves and their family. And, I've seen a lot of innovation. So for example, one fintech actually helped their small merchants create an e-commerce business, so kind of a plug and play. You probably saw a lot more movement in delivery services, and then fintechs on the back of them, verification. So it probably helped accelerate because people were, enclosed, not able to interact and move as much. So it probably spurred a lot more innovation that probably would have taken a lot longer, than had we not had the pandemic. Yeah. And so I think it's fascinating. Although I'm American, I've always had this fascination with the continent. My mom was in the Peace Corps and I lived in Niger as a child. So sort of after my investment banking stint, I really wanted to think about which way I would sort of pivot to the continent. And really, I had this opportunity to be the CEO of what really is a trade body for the PE and VC industry, based in London. And that was really my startup experience. Because, there wasn't a brand, but there wasn't a lot of cash in the bank. So really thinking about, as the speaker said before, where's the market gap? How do we fill this? How do we think about bringing resources that investors need, whether they're big institution, pension funds, sovereign wealth funds who want to directly invest in a large company, or whether they're an angel or an investor who doesn't mind taking a bit more risk. So, we produced information on sectors, and the sectors that are prevalent, and this also ties to the entrepreneurial activity, are related to consumer, our way of doing things better. So, that's a fintech. We don't need to go into the bank and stay a long time. Everything can be done on our telephone. So how the Africa growth story is buttressed is really about the consumer. And that's related to population. That's related to increase in disposable income. As economic development, as increasing, people are making more money, they can take holidays, they can buy nice homes, they can send their kids to private schools. So you found a lot of the investment will be in FMCG, in retail, in education, in commercial residential real estate. And that's really where a lot of the players on the entrepreneurial side is sort of looking at issues like payment, like transport, like delivery. For example, Jumia is, our version of Amazon, because, it may be quite difficult to, order something from John Lewis in the UK and also get that last mile delivery and not have it be cost prohibitive in terms of import and duties. So just again, on the PE and growth sides, they're really investing in pretty large family-owned companies that sort of want to leverage up and want to move from, let's say, Nigeria to all of West Africa. And ticket sizes tend to be 20, 30 million, et cetera. Those are larger. And entrepreneurs, what we have is a really exciting kind of ecosystem and energy around, these returnees, these entrepreneurs who have, local knowledge, have grit, maybe have, worked in other countries or worked at top Nigerian banks and are seeing what the problems are and thinking of innovative technical solutions to address them.
So can you walk us through maybe a success story or case study for, let's say, a returnee or just someone on the continent who has an idea and has maybe done some research to validate it? What do they do? What do you do next?
Yes, there are many of them. So there's a good one in the East African corridor. There's a company called Java House. It's really the Starbucks of East Africa, and it was started by an aid worker who happened to be American and was living in that region. And yeah, it's perfect. We all like to go to a brand that we know, the products we like, a meeting place that has, good Wi-Fi. Actually, a US-based African fund manager called Emerging Capital Partners invested in Java House. And that company sort of grew out to expand across Kenya. They created another idea of a pizza chain and a yogurt shop. So, different parts of Nairobi, will feel like sort of, any neighborhood in New York with, the brands we know and love. I can get my latte there and I like their croissants or et cetera. And I think that's really exciting. I mean, in South Africa, you'll have, what is the company that Walmart bought? Maybe it's Mass Mart, if I'm not mistaken. And again, that theme connects to a population whose income is increasing, and they want better quality goods. So there are many examples of companies that, can benefit from some growth equity and expand. And so, I think Paga is a good example of payments started by a Nigerian who'd spent some time in the US and wanted to solve this issue of, cost and time and ease of payments, probably very similar to M-Pesa, which is kind of the original homegrown idea of mobile money, even before there were smartphones, people to transfer money and to pay bills. And Paga did that for West Africa and, has been really, really quite successful. So there, probably too many to name. And also, Lara, I don't want to get myself in trouble for my colleagues on the continent for not having mentioned their portfolio companies or the companies that they've started.
So, Can you give any advice to budding entrepreneurs, or like, it sounds like there are VCs pretty early stage with presence in the continent. So what do you do? Do you just start talking to your network? Do you start calling up VCs? I mean, how would you describe the access to capital and how that might differ
Sure.
from the
So,
US?
yeah, of course. So, as you said, for 9 years, I was working for this trade body, sort of building out resource tools for institutional investors primarily. And since then, I've been working with startups on fundraising and scaling. Those who have an Africa focus, but these solutions could be applicable to other emerging markets. So, what I think is interesting, you'll probably have this experience as well, is that, you'll find an entrepreneur with a great idea and they have amazing technical skills and vision, but you also need a complement to that to be able to translate that into, a pitch or a model that investors can get attracted about to understand what that is. So in my work, I have tried to focus on, the soft skills. My son always says, if you can't explain it to a kid, you don't really understand it. And he's right. So working with them to be able to explain what the opportunity is, needing to be thick-skinned because it's, 1 in 10 startups are actually successful. Working with women, which, unfortunately receive far less VC funding than, that's my BBC moment, sorry about that,
Hello.
hello. So, working on the materials, thinking about the funding strategy, thinking about how to pitch articulately in an exciting way. So some advice for entrepreneurs is, I would really search for advisors who can help you in all aspects, all those things, guys. I think all those things are really important, that the materials are, as clear, because people's time is short and they want the opportunity to yell out on the page at them, because let's see, if we're taking angel investors, they could be in a network, or they could look at a number of pitches. So you want your idea to resonate with them, tailoring the pitch to different audience, whether someone is concerned about impact or if it's a foundation, et cetera. So, and then, as you're thinking about building, get the best advisors that you can afford. Accounting, have good management accounts, and sort of operate in the way that you aspire to. So, when I started working in Africa, 2010, 11, and I very much had the idea that I didn't want to embarrass Africa. And I know it sounds crazy, I'm not holding the entire continent of 1 billion plus people on my shoulders, but, I'm aware of biases. And I really felt that whatever we were doing, that it needed to be transparent and defensible and as democratic as possible and as good governance as possible. So I tried to replicate, even though we were, a small 3 million top line revenue business, I replicated the governance, or I aspired to replicate the governance of larger companies, because I felt that, when you're representing the continent of Africa, you just have to be better. And I would like to, and it's unfortunate that it's the case, but it's a good habit to have. So I think for entrepreneurs is get the best legal accounting advice that you can afford for your budget, have good management accounts, have good advisors, people that are respected, and just be really methodical and systematic about building the business. Don't take any shortcuts, and just really avoid any sort of activity that were to come out could be, detrimental to your efforts, all that you've built, and for the community at large.
Yeah, thank you for that. And I think, just as in anywhere, embedding yourself in a community of other entrepreneurs is incredibly valuable to help you just not feel so alone and keep you motivated.
Absolutely.
So switching to, you had mentioned that you advise also on scaling. I had heard that while there's great growth and investment on the earlier stages, that it gets harder when you get to Series A or Series B. How do you advise these startups that have shown early traction on the growth, and then getting past that Series B especially?
Yeah, I think it's really important. So I would say, to be fair, the VC industry is not that deep. When I started working in Africa, there were very few VC firms. There were very few accelerators. I don't think there were really any. Now there are a plethora. So, we're just at an early stage in sort of the life cycle. So that will change. So, I think that your board members, it's sort of a marriage, if you will, and that you need to think about growing the company. You need to speak aspirationally. So if you're preparing for what elements do we need? Who do we need on our advisory board? What are the characteristics? So for example, I've just joined a circular economy smartphone refurbisher that's going to serve let's say emerging markets, low and middle income countries. And we're doing an extended seed now, but we're going to do an A. So it's sort of thinking about the fundraising platform, thinking about the technology, and who do we need to accompany us on that journey. Because the shareholders, don't just give you the cash or hopefully they will help you make the introductions to the investors, at the next level. So it just takes really thinking strategically about where you want to go, and, ensuring that you sort of build that into your planning. So a governance perspective, who are those shareholders, those VC shareholders that you might want to join your board? What experience may they have? For example, if you want to expand in the UK, you might look for someone who's sat on a regulated body, who has an experience with the FCA and PRA, the SEC equivalent here in the UK. If you're a telecom, someone who's been a CTO or run a telecom, that's the way I would really think about it. And also, ensuring that you have all of the metrics that they will look forward. The long-term value, the customer acquisition cost, healthy, increasing monthly, or MMR, your monthly recurring revenue. Also, and there's lots of information that I'm sure it's available at Columbia, but in the public domain that you can get and sort of help you prepare. Having the right team in place, all of that makes sense. But it can be a difficult ask because often the CEO and founder is really focused on product development and all of the technical pieces in production, that it's good to have a counterbalance to help you plan to think about that next step.
There's a couple questions, but I'll just ask one more question about the investor side. So a potential investor that might be looking at investing in entrepreneurship in Africa. What advice do you have? Like, what organizations to align with? Are the time horizons kind of different from they are, at least in the US? Any thoughts there?
Yeah, sure, absolutely. So I think the first question is kind of risk tolerance and how much money do you have to allocate? So, I'll start from the bottom. So, say you want to put 100,000, but you're somewhere in the US. So it might be a bit of a challenge for you to, advise that funder. I would think about joining an angel network where, the risk can sometimes be shared. You have, other thoughts and, they can be debated. So I think about joining an angel network and starting with, small ticket sizes. They're also fund of funds, but 100,000 might be a small ticket size, but there are fund of funds that will help you diversify the risk and, look at various sectors and regions. So just kind of moving up the scale. So if you have a couple of million, of course, you could invest in directly in a fund. And there are a wide range from gender lens, impact, sectors, country, regions to Pan-African, depending upon what you do. If you're a sovereign wealth fund of a US pension fund and you really want to go big, but you feel apprehensive, I would suggest a fund of fund, or investing alongside an IFC, for example, and they have many different programs. So, the reason why I say an IFC is, these development finance institutions have been in these markets, I mean, probably longer than we've been alive. So, they sort of know the landscape, any potential issues that could arise. They have colleagues that are in country, and that really accounts for a lot for emerging markets. So there's a wide range of what you can do. If you feel uncomfortable with private market investing, they are hedge funds that give you monthly liquidity. They are listed funds, probably with equally frequent liquidity. So there are many ways to play. I mean, what I would say, if you are trying to create a diversified portfolio for alternatives as an investor, that Africa is a continent that you would be remiss to miss. Because there's so much opportunity. In terms of holding periods, I think it's important to realize that it may take a bit, longer than investing in any similar strategy or founder in the U.S. just because of the nature of putting money in an emerging continent, and that's to be expected. You need to think about it as patient capital. That doesn't mean that fund managers, for example, aren't delivering alpha, or you don't have a good bet. It just means it might take a little longer. And I think that's probably not unusual for the stage of, I'm going to say the private market, if you will, entrepreneurs and companies taking growth equity.
Excellent. Thank you for those insights. We have a question from Joanna, talking about specific sectors. What about sustainability, specifically sustainability tech? Do you see much of that being developed in Africa?
Yeah, sustainability is very key. I mean, I think not just from the emerging world. So you may know that something like 70% of the land on the continent is devoted to agriculture, and we're in this kind of tipping points in terms of the state of our world, looking at food security. So there's a lot of focus on, as part of various strategies in terms of meeting the SDG goals. I can't think of any specific to mine sustainability in tech. I'm sure that there are, for example, startups supporting small farmers in loans or helping them manage crop yields, or ways to finance through down periods and up periods. I'm sure that there is innovation looking at that. I just can't think of anything at the same time. But I think sustainability is an issue where there's a focus across all levels. So meaning, by the entrepreneurs, both those in country, but expatriates or returnees that are coming back, by development finance institutions, all of them globally, who put a lot of development capital into the continent. So yeah, I think that is probably top of the agenda.
Excellent. That's good to hear. From Bruce, actually, I love this stat. Globally, we're seeing that the highest levels of success of high growth businesses are started by older entrepreneurs, around 55 plus, and intergenerational teams. Have you seen this phenomenon happening in Africa as well?
Oh, Bruce, was that question for me? I feel like that question is for me. No, I think it's important to have a growth mindset, at whatever age. And I think experience counts for a lot. Maybe I'm saying that just for me, but also, having a growth mindset in the sense that, learning can be a two-way street. So yes, I've seen it. I see, the growth can happen from the senior team, the management team, with advisors or board members. So I don't think that there is any ageism yet. Although it should be noted that I think the average age across the continent is maybe 19 or 20. So it's a very young population.
Okay, curious to, you mentioned a lot of investment coming in internationally. Is there any specific trends you see? Like where is the investment coming from specifically?
Sure. So yeah, it really all depends on which level. I think given that we are, so the at the growth equity level, the majority of the investors tend to be development finance institutions, sovereign wealth funds, who are writing the big tickets. At the venture level, we're seeing, Silicon Valley placing money, with graduates of their accelerators who are going back. And that's really positive. So I think it's coming from across the scale. So all entrepreneurs will start off with their friends and family and their network. They may hire introducers to give them access to high net worth or family offices. We're increasingly seeing African sovereign wealth funds putting money into VC firms and large firms. And I think that's really positive. I consider them the extended friends and family because, of course, they're very local. So, for example, Nigerian Sovereign Wealth Fund that maybe launched, 5 or 7 years ago with 5 billion has a kind of a healthy program of investing in PE funds, but also VC funds. I don't think that they're doing entrepreneurs just yet. In South Africa, probably one of the most developed countries, has a huge sovereign wealth fund that's probably close to 200 billion in assets, a very sophisticated investor. And they put money in small funds outside of Africa. So it's really happening, and that's positive for economic development. That's positive for entrepreneurs because it just, supports innovation at the smaller end. And you have, this sort of relaying, going through the various series and exiting to larger investors, and hopefully to IPOs or trade sales. It's just really developing the market, of supporting, companies, which, we hope will be unicorns, but not just that, it's providing jobs and skills and tax revenues for the governance, for governments. So it's a kind of circularity that's really positive for the continent.
Excellent. Well, very exciting space to watch. And thank you so much for bringing your experience and your insights. Personally, really, really wonderful to reconnect.
Thank you.
Thank you.